The government has taken more and more money out of people's pockets because of bracket creep. This has seen Labor preside over the biggest tax increase in a generation, with data showing that on average, tax revenue in the 2022 financial year went up 15% in nominal terms. It's a tax increase by stealth. The OECD has said that this phenomenon of bracket creep automatically generates higher nominal tax revenues for governments, but does so in a way that lacks transparency. A tax increase, as I said, by stealth. These tax rises are not legislated, and right now they're far larger than they have been in at least a decade, partly because of inflation. Other Western countries get around this by linking their tax thresholds to CPI, but we don't do this. Australia has among the highest personal income tax rates in the world, and the last time Australia properly adjusted tax thresholds was 16 years ago, when the top tax rate of 47% kicked in at $180,000. Since then, far more middle-income families now fall into this top tax bracket, a bracket that was meant to be reserved for the very wealthy. The unconventional economist and co-founder of macro business, Leith Van Onselen, and chief economic advisor at Judo Bank, Warren Hogan, join me now. Welcome to you both. Warren, we've just heard the news that the tax cuts for anyone over $150,000 will be scrapped. What's your reaction to these changes?
Yeah, Sharri, look, the good news is it looks like what they're trying to do here is provide cost of living support to low and middle income earners without providing new money to the economy, that is to be revenue neutral. So they're doing that by reducing the effective tax cut for high income earners and giving that to low income earners. And that's good news in the sense that one thing economists have feared is that extra handouts, cost of living measures will only make the RBA's job harder, maybe result in more rate hikes or at least delay rate cuts. So that's the good news. The bad news is, of course, this further damages the credibility of our government. These are not proposed tax cuts, these are legislated. And because people have rightfully been planning for this, you can actually see a tax cut withdrawal as actually a tax hike. And that's not good news. And of course, the final point is it does undermine the overall efficiency of the whole tax package, and that is the reform element to it as well. So I don't like the idea, but there is a shining side in terms of less stimulus for the economy.
Leith, what do you think about this, though? You know, people on over $150,000 who haven't had the tax threshold adjusted in some 16 years.
Yeah, look, I mean, I agree with everything Warren just said. Australia is incredibly reliant on personal income taxes, more so than most other countries. And as you beautifully summarised at the start, basically we've had decades of of bracket creep, which has gotten really bad in the last year or so with the inflation crisis, and households are now paying a record share of their disposable income on taxes. But the electoral math for the Albanese government was pretty simple. You can either keep the stage 3 tax cuts the way they were, which applied to a very small number of people, number of voters, or you can expand it to a much greater number of lower income earners. I do worry that they will be more inflationary than they would have been under the old system, simply for the fact, even though there's no new economy, no new money going in, lower income people tend to spend their money more than higher income people who tend to save it more. So that means that we should get more demand in the economy. But ultimately, we need proper tax reform, and we need to move the tax base away from productive effort through personal income taxes.
Warren, I actually spoke to an economist who said the same thing as Leith just said today, that the tax cuts that were meant to come in for the higher income bracket, that people in that income bracket usually save that. Is that something that you agree with, that it would have been less inflationary under the old system?
Yeah, at the margin though, really. I mean, the reality is that in this day and age, if you're earning 200 or 250 grand, you're very much in middle Australia. And given these cost of living pressures and mortgages and rents and everything that's going up, I think a lot of it will be spent. So I think it's marginal, but it is the right way to think about it. But I just want to emphasise the points you both made. Personal income tax revenues for the government, according to the ABS, was $65 billion in the September quarter of 21, And in the September quarter of 23, they were 90 billion. That's a 40% increase. The bracket creep is out of control. And the most important thing we need to address in this economy is reducing our reliance on income tax, as Leith suggested.
Yeah. All right. Well, just very quickly before we go, Leith, you know, Warren just said that people on $200,000 or $250,000 are now middle Australia, and they might be, you know, spending the money they would have got, they're not going to get now. What do you think about this? Because Labor now are saying that anyone over $150,000 will not be getting a tax cut. Is this middle Australia, or is this how Labor sees those people? Clearly, the top end of town.
Yeah, I think they actually will receive the tax cut. My reading of the situation is that someone on 200, for example, will receive the same tax cut as someone on 150, whereas previously they would have received more. So I think they still will receive a tax cut. They just that instead of receiving, say, $9,000 a year, they might receive, you know, $4,000. I'm just guessing. I haven't actually seen the package. And obviously, you know, whether that's a high income or not depends where you live. If you live in Sydney and Melbourne, you've got a big mortgage and a family, it's not particularly high. But when you look at the overall, dispersion of taxpayers in Australia, it certainly is high. They're at the higher end.
Yeah. All right, Leith Van Onselen, Warren Hogan, thank you both so much.